Hello everyone, welcome back to Mommy Trader. If you are new around here, welcome, and if you are a returning subscriber, thank you so much for coming back. I do appreciate all of you guys being here. Just so that we can have a refresher, I am a family of 5. We plan on achieving FIRE, which is financial independence, retire early, relax, relate, release early, and 5 coming up in 6 years, but we're actually coming up on 5 years now. So if that sounds interesting to you, or you just want some motivation so that you can get started on whatever your financial freedom journey is, we talk about investing, rental properties, paying off debt. We talk about financial psychology and emotionality and how that impacts the way we approach our finances. We just talk about everything around here. And if that interests you, hit the subscribe button, like, share, hit the little bell notification button so that you don't miss an upload, and leave me a comment below. So today's video is going to be talking about home ownership, and we're going to approach it from 2 specific corners. Okay, I'm going to talk to you first about home ownership in terms of if you plan on buying your first home and living in it yourself, and then we're going to also talk about home ownership from the viewpoint of rental properties, because I've been getting a lot of questions about rental properties, and I figured let me just make a separate video and just give you guys some tips on what my husband and myself have done. Now, I'm not going to give you any type of general type of advice. Everything that I'm going to be talking to you guys about, we've done it. This is first-hand experience. We own the home that we live in. We also have 2 other rental properties, and we have our 3rd pre-approval for the 3rd rental property. Okay, so we got some receipts. We actually putting our money where our mouth is around here. Okay, so that's one thing you can always count on this channel is 100% transparency. Okay, transparency. So let's get into this video. So let's first talk about home ownership if you are trying to buy a home. And I'm also going to talk about this from this type of housing market, because the housing markets of old does not compare to what is going on right now. So if you are trying to buy a home, it's so important to understand the type of housing market you're in. Sometimes it's a buyer's market, sometimes it's a seller's market, and then with this market right here, sometimes it's a cray-cray market. And this is exactly the type of market that it is. Granted, it is towards the end of September, so the market has cooled down a bit, but it's still really hot in several places in this country. And one of the main reasons, guys, that this housing market is not so much like the 2008 housing crash is because a lot of people who are buying homes now actually can afford them. Remember, the 2008 crash, there was a lot of subprime lending going on. There were people who were getting these big mortgages who really could not afford them. I'm talking about somebody making $50,000 a year getting a $400,000 mortgage. Now, I mean, if you run your budget right and all that, but for most of the people that was getting those types of mortgages, they could not afford those mortgages realistically. And as a result, 2008 happened. But with this type of housing market, remember guys, a lot of people were stuck in the house for what, 15 months? We're talking about from March 2020 to, let's say, June 2021. That's 15 months of being in the house, not having to pay for childcare, not having, extra frivolous spending. And people started to realize and also accumulate money. And what they realized is that a lot of the work that they were doing, they could really work remotely from anywhere. So they didn't have to stay in a smaller apartment or in the city or in a certain state. They could move to wherever they wanted as long as they were able to do their job. Also, the Great Resignation, people are also quitting their jobs and moving to other fields and other avenues where they don't have to be situated in one place. So those are a lot of the factors that are affecting this type of housing market. And yes, this market has slowed down a bit, but I don't believe it will be for long at all. Again, I think it's going to rev back up. Now, I'm not a financial advisor and I'm not, some type of forecaster, but I just track trends and I track numbers, and I own 3 homes. So, I mean, just trust me, okay, when I'm talking here. But one of the things you can do if you're looking to buy a home in this market is to understand this market. You have to come ready, right, and tight. Okay, make sure your credit score is looking really good. Make sure and understand that you have the down payment that you need, and I'm going to say the and here, closing costs. The probability of you getting seller's assist in this type of market is very slim to none, and more so on the none side. Okay, so just go in expecting, okay, you're going to have to put your 20% down, and you're going to have to come to the closing table with money in your pocket. Another thing is that the loan type. So you have FHA, conventional, VA, you have the USDA, and all these other types of loans. And I can tell you guys from firsthand experience, now we closed on our second rental property back in May of this year, and we saw this happen. Your loan type sellers really pay attention to. The conventional offer, if you have to get a loan, conventional is always best. Conventional, try to go ahead and get the conventional. Followed by the conventional is FHA. Now, a lot of sellers are hesitant to take FHA because FHA really does make a seller go through extra hoops that they really don't want to have to go through if they got 4 and 5 other offers that are all conventional, or the infamous cash buyer. Now, I know that there are a lot of corporations and companies buying homes, but there are a lot of other people that are also paying for homes in cash. Remember, I said people were stuck in the house for almost a year and a half. And so if you're stuck in the house that long, you're able to save and accumulate as much money as you can so that you can go somewhere else. Another thing that you should expect in this type of market is overbidding. Go in at your best price. Do not go in and try to expect to go back and forth with the seller. The seller is not doing that in this market. So try to submit your best offer. That means make a mock budget, write down all of your expenses, and then see what you can afford. See what your best is. Don't overbid if you know you can't afford the house. Again, guys, I don't want you to kind of get too much house that you can't afford, but rather, and Tara talks about this a lot over Journey to Wisdom and Wealth. I'll tag her up above, or I'll just leave it in the description box below. But she does mock budgets, and I love seeing it because I'm a big fan of mock budgets. It's a really great way to estimate or project how your new reality will look. And so it's so important, guys, to make sure you can afford this house. Don't get so caught up in the emotion. I know it's an emotional process, but it's so important to step back. One great thing that you can do is run your numbers and run your scenario past someone else, and not your spouse. I'm talking about a trusted family member, a trusted friend. I had people reach out to me, and I've been able to, help them with something like that. And speaking of that, if you want more private consultation or money coaching, investing coaching, check out my website, MT1 Finance. Really great way to get a hold of me there. And I really think you would benefit from my experience. But moving on, one thing I love that Tara talks about is she really plugs in her numbers at different mortgage amounts. So if you get a mortgage for $200,000 and you want to really stay around the 150, try to do a mock budget for 150,000, then 175,000, and do another one for 200,000 just to see or get an idea of what your numbers would look like. And also interest rate plays a big part in this. Now, the great thing is that interest rates are super duper low right now. So your money can actually go farther for you. But again, guys, you want to make sure you don't get in too much over your head and you overbid for a property that you can't realistically afford. But if you can, just have your stuff ready and do your best offer. Don't try to go back and forth, because remember, there are a couple of other people that are trying to do the same thing. The next thing that I want to talk to you guys about in terms of home ownership in this housing market is that when you go to tour a property, and I suggest do not buy a house and you don't go see it with your eyes. It's something about seeing things in person that you can kind of feel something from. You can touch things. I suggest you go in person and you take someone else with you. Also, keep in mind, when houses come on the market, you got to go see those houses okay, if it's a Wednesday and the house come on the market, do not wait till Saturday to go see it. Try to get off of work a little early. Try to book an evening appointment. Whatever you can do. Go on your lunch break to go see the house. Then, especially if the market that you're trying to buy a house in still is kind of, hot. And so another tidbit that I would give you if you are trying to buy your first home is that you make sure you don't open any new accounts. I've seen this happen. People get the house, their offer is accepted. Let's say 2 weeks later, they open up an account for something else, and something hits their credit report, and now they can't get the house. I've seen it happen A lot of tears were shed, and the bank, remember, the bank is not attached to this like we are. Remember I said it's an emotional process, but the bank is looking at, okay, you opened up a new account, your credit score was dropped, and we either going to lower how much you can get, or we're going to kind of do away with the whole transaction. And I just don't want to see any of you guys go through that. So do not open nothing. What does Dave Ramsey say? Rice and beans and beans and rice until you get to that closing table and you sign on the dotted line. Now, after you leave closing, you can go down to Home Depot, wherever, and open up whatever you want. I would suggest that you kind of plan ahead, but I'm just saying, just be strategic about how you approach lines of credit and your credit score and report leading up to closing. You don't want to get your offer accepted in this crazy market and then have it go down a drain because you accrued or you opened additional debt, or you get a ding to your credit report, because them dings, they really can go against you like crazy. And I keep saying like. I'm sorry, guys. I'm working on not saying like or so much. I'm really working on that. And I've been working with my kids on that too. So I'm trying to do it right, y'all. Okay, so let's talk now about if you want to buy a home, a rental home. So a lot of you are interested in getting into rental properties. Now, rental properties is a little different than buying a home so that you can live in. So first, let's say you want to get in it and you don't have 20%. The best way to get your feet wet into the whole rental property life is to just use your first property as your first rental. What I mean is, if you own a home already, if you are a homeowner, use that property as your first rental property, and then you can just buy a second house and go on from there. But a lot of people who are interested in getting rental properties really don't understand that you have to, in most cases, put 20% down, and some banks are actually requiring you to put 25% down. So again, guys, if you are buying a house that, let's just say, is $100,000, 20% of $100,000 is $20,000 in cash. That does not include your closing costs. Keep in mind, inspections and all other type of stuff, that all has to be planned for. So you got to remember 20% down on the house, and then you have to estimate another couple $1,000s for all of your closing costs, fees. Okay, so that's really, really important. Another thing about if you want to get rental properties is understanding that there are highs and lows. You have to think differently when you are doing this as a business. Now, this was something I had struggled with for a little while. I would get so emotional and so like distraught when we had problems with tenants. And my husband would always say, you have to think of this as a business. Number one, get your properties under an LLC if possible. It'll save you a whole lot of stress and headache when it comes to tax time. The second thing that you should do is to try to keep your credit score as great as possible. Remember, when you are trying to buy an investment property, you are a riskier applicant to the bank. They view investment properties as like totally different than if you're going to buy a home to live in. So you want to make sure that you are the best applicant possible. That means keep that credit score tight. Have that down payment, because the bank is going to want to see proof. Okay, we want to see a statement that you have this money in the bank. You got to make sure that you have the closing costs right. Get a good realtor too, guys. This is for buying a home to live in and a rental property. A realtor in this market, a good one, will make all the difference. Some of these realtors out here do not understand the type of seller's market that it is right now. Even though it's cooled a little bit right now, still, there's a lot of realtors that do not understand the type of market that we're in. And as a result, you may lose out on a lot of good properties, whether you're going to live in them or use them as rental properties. And so again, guys, try to get like a realtor from a referral, because referrals are always great when you're trying to find professional people. Or just go to Google or some of like Yelp, or just some of those sites where people can leave reviews talking about their experiences with realtors. But yes, find a good realtor, like a very, very, very good realtor. The next thing I want to talk to you guys about, if you are interested in rental properties, is tenancy. Now, Tanisha over at Fun Budgets, I know I'm saying her channel wrong. Tanisha, okay, she knew who I'm talking about, and I'm going to put her channel in the eye in the sky and on the screen. But she has a great series going on right now talking about her road to eviction. Now, this is a really, really great topic in terms of following when things don't go right when you have a tenant. There are times when tenants will not pay. I think a lot of property owners in this pandemic discovered that, is that people will use this pandemic as an excuse to not to pay. And we are just so fortunate that our tenants have not done that. Now, our tenants is one of our tenants is a habitual late payer, and that's something you got to be prepared for too. Most renters do not pay on the first of the month. They pay in the middle or towards the end of the month. So count on getting your rental payments late. But just speaking a little bit quick about the eviction is that sometimes you may have to go there. You may have to evict a tenant. And one of the things you can do is just go to your state, because tenant and landlord laws vary state by state. Some states are very pro landlord, others are very pro tenant, and then you have some states that are very, neutral in the middle. And you want to make sure that you go and you read. You can't just go to their door and bang 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 or go in a house, because again, this is a business, and remember, the judge could throw your case out because you did things the wrong way. So go to the website, whatever state you're in, and research those landlord tenant laws, because it's so important. Most states will have you to put a notice of pay to quit on the door if they don't pay. You give them some time, probably like a couple weeks or a month. If they still don't pay, then you can go ahead and file for eviction, and you will get a court date. You will have to pay some type of fee. You get scheduled, they deliver it to them, they deliver it to you, and you both show up and kind of plead it out in front of the judge. And so that's what we did in our experience. And the great thing about it is that scared our tenant, where they just kind of been doing it right ever since that point. And so, but sometimes, like in Tanisha's case, you have to go ahead and evict someone because they just won't learn, or they take your kindness for weakness. And that's something that you have to be prepared for. And speaking of that, make sure that if you are going to get into rental properties, that you can afford to make that mortgage payment on your own every month, just in case they pay late or they don't pay at all. Remember, that property is still in your name. So if it doesn't go paid, or you're trying to have some vendetta, like, well, if they don't pay me, I'm not going to pay the mortgage. No. This is a business. You still continue to pay that mortgage, so that number one, you can show the judge that you were doing things by the book and you were doing things correctly. And number two, because it is your property, you don't want your property taken because someone else decided not to do right by it and by you. Okay, guys? So just keep that in mind. Research your tenant. If you get prospective tenants, research. Okay, and that means go on their social media too. All you gotta do is type their name in, something will come up. If you see them doing drugs on social media or all this other type of stuff, 9 times out of 10 they may be doing that stuff in your property. And if you know you do not have that going on, 9 times out of 10 they may do it anyway, and you want to just save yourself a lot of the headache. Background check, credit checks. We require 3 months up front, and not even 3 months. We require first, last, and security. Okay, we also have income requirements. We require 3 times the monthly rent. Now, it could be the individual person, it can be a couple, it doesn't matter, as long as the income coming into that household from all different avenues equals 3 times the monthly rent. So if we're charging $1,000, we expect $3,000 a month to be coming in to the home. It's just a safer way for us to ensure that the tenant can actually afford to pay the rent on time each month. And then just keep your inspections up in terms of, if you are a landlord, a lot of times you have to have a rental license. Now, not in all states, but where the state that I live in, you have to have a rental license when you become a landlord. You want to make sure that you keep your systems up. That means roof and HVAC, foundation, because at the end of the day, like I said, this is your property. But one of the things that I love about having rental properties is that the income is really stable. Like I mentioned, outside of the pandemic and maybe a few issues here and there, the tenants really pay on time. And that's what I really, really like about it, is that we can expect that money each month. They pay through the apps. I suggest that. We used to take checks or cash. It's so much easier, guys, through apps. Keep great records. I can't say this enough. Keep excellent records when you want to be a landlord, or if you are one, especially if around tax time. And this is where I suggest you get a really good tax person to help you file your taxes. They know all the loopholes, guys. There is no way that we are bringing in $300 something thousand a year and getting refunds. Why? Because of all the write-ups. Remember, we have 3 side businesses right now. This is in addition to the 9 to 5. Okay, so you want to remember that businesses, government loves businesses. Write off, write off, write off, write off. How will you know all those write-offs? By getting a good tax person and keeping good records. Okay, so I really hope that you guys enjoyed this like snapshot into home ownership. I really didn't want this video to be too long. I can see we just crossed 20 minutes, but yeah, I hope that you guys enjoyed it. Let me know if you are interested in having rental properties and if you're not, because there's no right or wrong answer here. Some people love being landlords, other people don't want to be landlords, but whatever you want to do for your own personal financial goals, it's okay. It's good. Remember, there are more than one road to financial freedom or financial independence. You just have to choose what's best for you and your family. Okay, guys? So I'll see you in the comments section. Don't forget to like, subscribe, share this video so we can get more of this information, right? So I don't want to just be building wealth by myself, and I'm sure you don't want to just be building wealth by yourself. So let's get this information out there so that other people can get access to it. Again, guys, thank you so much. And until next time, I'll see you in the next one. Bye-bye.